Konnichiwa and Assalamu Alaikum. In the markets this week we've seen some selling on UAE bourses as volumes have dried up and valuations have declined in response to the lower demand. With only 400 million dirhams average traded on a daily basis this week, investors have really been struggling to find the catalyst necessary to get back into the market and demand higher premium for stocks. All prices have been solid, however the lead from overseas markets has been generally weak, and local investors are really looking forward to fourth quarter earnings and potential credit developments as a boost for UAE markets. But in the short term, with the holidays just around the corner, a lot of investors have exited the market and are looking for new catalysts in order to get back into the stocks. Air Arabia has reported third quarter net profit of 143 million dirhams and revenue of 547 million for the third quarter. Excluding exceptional items, net profit has actually risen by 6% for the 9 months ending 30 September, which we believe represents a strong result in such a constrained earnings environment. Gross profit margins actually increased to 25% during the third quarter from 23% this time last year, as the lower hedge fuel prices and cost per passenger offset some of the loss of scale from load factor ratios, which have declined to around 80%. Despite the load factor declines, around 79 or 80% load factor represents outperformance versus industry peers around the world and reinforces the company's solid market position as consumers continue to transition from the full-service airlines to low-cost carriers. During the third quarter, the company reported that there was some loss of passenger growth due to the seasonality of Ramadan and also the general industry slowdown. Looking forward, the company reported load factor ratios of 83% during October, which bodes well for earnings during the fourth quarter. Overall, we believe that industry conditions will remain weak in the airline industry over the next 6 months. However, the company's low cost base, increasing contribution from the Moroccan hub, and new routes that were introduced during the second and third quarters of this year will continue to support earnings growth during 2010. The company intends to open its new Egyptian hub with Travco during April next year, and also plans to have the 300-room hotel located at Sharjah Airport open during the second quarter of 2010. Cash flow generation remains strong, and the company has around 3 billion dirhams worth of cash and investments on its balance sheet, which is equivalent to 64 fils per share, making the valuation even more attractive for investors. Given the strength of the company and its growth profile, we believe that it deserves to trade on a higher PE multiple and retain our overweight recommendation and price target of 1 dirham and 33 fils. Oil and gas company Dana Gas has reported a third quarter loss of 79 million dirhams, excluding 257 million dirhams worth of unrealised gains from the equity sale in Pearl Petroleum to MOL and OMV, which was booked to equity instead of profits. The loss was due to exploration write-downs and provisions specifically relating to 3 wells in the Egyptian region for a total of 100 million dirhams. Net profit for the 9 months ending 30th September was 281 million dirhams, equating to 0.04 dirhams per share. The Egyptian operations recorded production of over 9 million barrels of oil equivalent to date, taking the total to 7 discoveries out of 11 exploration wells during the 9 months to 30 September. Egyptian production is forecast to continue growing and contribute around 40,000 barrels of oil equivalent per day by the end of this year, and going into next year further growing this production rate, which will underpin solid earnings growth for Dana Gas. Revenue of 909 million dirhams for the 9 months ending 30th September was adversely impacted by lower LPG and condensate prices during the period, offsetting the impact of higher production from Kurdistan region in Iraq. Looking forward, the company plans to continue developing the Kurdistan region of Iraq, with the Core pipeline completed during late September with partners Crescent Petroleum, MOL and OMV. Further guidance has not been provided by the company in relation to its legal dispute with NOIC regarding the pipeline from Iran into Sharjah, planning to support gas supply to the domestic UAE market. Despite the exploration write-downs during Q3, Dana Gas's strong asset base of proven and risked reserves, with high production rates likely during FY10, is likely to underpin strong EPS growth towards 10 fils per share next year. This growth really justifies the high PE ratio of the company, and we believe on current multiples represents appealing investment value. In other news, Union Properties, listed on the DFM, reported a third quarter net loss of 152 million dirhams, which was dragged down by provisioning for the loss of receivables of 125 million and fair value loss on investment property equating to 166 million dirhams. Investment company ABAR has teamed up with Daimler AG to acquire a 75% stake in the Brawn Grand Prix racing team. The ownership split will be 60-40 Daimler and ABAR. Dubai government officials have restated that the government's second tranche of its bond issue will be completed by the end of 2009, equating to around $10 billion US. We believe this will act as a strong catalyst for local equity and credit markets, and in particular high volume index stocks such as DFM, Arab Tech, DIB, Eldar, EMAR and DP World. That's all for this week. Happy investing, Alarica, and sayonara!